It is very interesting. So this study was done by Galileo as an independent study. It's a proprietary research. The intent of it started with wanting to understand what was happening in fintech and get a lot of feedback from consumers who actually use these products as a result of innovation that has happened over time. And what you'll see very interestingly from the data, 77% of the people still use traditional banks as a primary or a secondary bank for them. And it's understandable, right? They are the stalwarts of finance and the industry, you want to use them. But then some interesting trends have emerged. About 49% of consumers still have a standalone digital account. And the standalone digital account could be something like a mobile wallet or a digital wallet that you use for your digital transactions. And then another trend of evolution is happening where about 36% of consumers prefer to have either one of their primary or secondary providers as a digital-only bank. It makes sense, right? Like when I look at it, what's happened in, let's say, the last 18 months of not being able to go out, being worried about health and safety. You want to be able to do a lot of things on your phone from the safety of your house, from your laptops. And that is why I can get behind why that trend is important. What was surprising about it is just the diversity of choices amongst it, because for different actions, like if I'm shopping on my phone, I want to be able to pay with the convenience of a mobile wallet. If I'm on the web, I want the security of a digital wallet so that I'm not sharing my card transactions around. And that is the trend that we are going to continue to see with consumers. And so the consumers, what we are starting to see is they want choice. They want, for every action and every walk of life, different ways of transacting, but there still isn't one institution that caters to all of their needs. Yeah, absolutely, right? Like there are two different things. One, you talked about the generational side of it. People are changing. The needs of the children now are different. Like I have a daughter who's 14, and we're trying to teach her about financial responsibility. She's never actually been inside of a bank, and teaching her financial responsibility and saving while having her get a notion of a bank. For her, a bank is on her phone. And so having a digital first experience is important because you have to relate to your customer. You have to meet your customer where they are. And for my daughter, teaching her that meant signing up with parent and teen digital products where I could get her a card, but I still had the safety and security of being able to monitor what she was doing with it. And I was able to bring it to her in a medium that she's most comfortable with. For her, it is saving is as simple as dragging right and seeing your money move into your savings account. And those are the experiences that we have to look forward to. And the experience is a great call out, right? Because if you think about it, we have so much information coming our way from all sides. I don't think people are reading text anymore. They are not reading headlines. They are not even reading big terms and conditions that we show them. People gloss over text, and so they just barely have time to interact in the form of images and animation and UX. And that is why you see a huge uptake in user experiences of that kind. That is very interesting. I am a builder at heart, and for me, you build products, you lead with data. You not only lead with data to inform what you're going to build, but then as you build, you measure along the way to see if the product is doing exactly what you intended it to do. What is the data telling you? And it goes back to the fact that our world was changing. It was already changing. We thought a lot of these waves would come in 5 years, but they came sooner than we expected. 18 months is very quick. And so for a lot of the traditional banks, for them, it is going to be about understanding the data to see what are the mediums, how do they connect with people like my daughter to be able to get their business as these children grow up and go through milestones. Like what do they need? And go ask them and identify those insights. Likewise, for challenger banks, it's also trying and understanding what were the pain points, what causes people to choose a financial institutions, and what causes them to switch from financial institution. Because in the absence of that, you cannot really design a true customer-centric product, because the world as we know it today always prioritizes experiences over the actual task. It's no longer about the task, it is the experience you go through. That is very interesting. So when we looked at the research, and this was surprising to me, but then it kind of made sense. When people look for choosing a financial institution, they look for things such as the top 3 things that they look for would be security, it would be privacy, and it would be fees. But then as you've established that relationship with your financial institution and you're looking to switch, the things that actually end up bothering you the most that would cause you to switch would be things like rewards, it would be things like fees, like, hey, what else can I get? Like, how can I make my money work for me? How can I make it work faster? How can I get more out of it? And can I get rewards back that I can use into paying for experiences? So then it's almost like money multiplying for me, right? If I had $100 and I got $5 in rewards, now I can use those $5 for something else. So rewards was one, fees was one, and I think fees is a combination of both understanding your fees very transparently and actually feeling like your financial institution has your back and is not fleecing you at every turn. And the third one was privacy, especially when we think about where is my data going? Do I have control of my data? Is someone making decisions for me without me knowing what is going to be done with my data or who I am? And making sure that we have that is oftentimes the reasons why people switch. I'm actually going to lean on experience because one of the ways in which we inform our roadmap is largely through talking to our customers and our clients. And when we go out and talk to our clients, some surprising things that we have heard is people don't always want to be rewarded in cashback points. Sometimes they want to be rewarded in the form of a cause that they are passionate about. So they want that every time they spend $1 for something, a tree is planted somewhere. Sometimes they're like, hey, I want to learn how to do investing. And so I want rewards that can be converted into crypto dollars and crypto investing. Sometimes there are consumers who are like, I want to spend for charitable causes. Is there a way by which I can spend on a transaction and the pennies are rounded up for good? And can I collect these pennies over time and can they form into a larger pool that I can go invest? And so the patterns of people are changing and they want different kinds of rewards. With Galileo, our aspiration always is to create a platform that enables our clients to configure the rewards that are right for their consumer base, for their businesses that they support. And as a good platform, we abide by that responsibility very closely. As we think about the future and what more is to come beyond what we've already seen in the past few months at this point, there are 3 things that we hear very common themes from our clients. Number 1 is they're looking to increase the lifetime value with their customers as well as the stickiness. So what are ways in which they can help their customers not only get access to things such as rewards that we talked about, but other capabilities so that the customers don't have to find themselves in situations where you have multiple providers you work with. Can I develop a relationship with a financial institution and meet all of my needs? So creating that greater lifetime value and then enabling greater spend is definitely one goal. The second one is as customers learn to get their money right and help grow their finances and get more fiscally responsible, are there better ways in which we can give them access to credit products and lending products? How do we get them access to more money? And then the third one, which I think is the premise of our whole study, is it was incredible to see the data, but as a platform, we want to be able to make that data available to our clients as well. So how do we get them the data about where are consumers spending? What do we see as merchant activity? What do we know more about these people? And so those 3 things between lifetime value, access to credit, and access to data are the 3 biggest things that we are thinking about.